Welcome to this presentation of a great technique for extending your gains. This is a Specialist Trading weekly stock lesson for the week ending September 23rd, 2011. Now, I've spoken about this technique in other Specialist Trading courses, but I want to share it with the stock course in particular because I feel it can really help while we're going through this large trending phase in the market. But before we begin, I ask that you please take a moment to view our disclaimer. I'm going to show you some performance results using this particular technique. But remember, we can in no way guarantee that any of these results will be repeated in the future. So please take a moment to view our disclaimer, and then we shall begin this week's stock lesson. Let's begin now by talking a little bit about this technique. Firstly, it's designed to catch large trending moves. So if you're trading a particular strategy, most likely strategy number 4, where you're just in and out in roughly about 3 days, and you really feel there's a lot more move left in the direction of which you're investing in, well, then you may want to use this technique because, as I said, it's designed to catch the larger trending moves. And it virtually works on any of our strategies in any time frame and in any direction. So it doesn't matter whether you're going long or short, if you're looking at a weekly time frame or even an intraday bar time frame, this technique can be applied and will work just as well. But the main thing I want to stress is that it works best with multiple lots, meaning that you have to trade roughly an even share size so that you can sell partly at one point and then the other half at another point. So it works best with multiple lots that are even lots. And I'll go into detail and explain how to use this technique as well. Now, the only indicator we're going to apply for this technique is our 5-period RSI. This is the standard RSI tool that we use a lot, but we're just, once again, defaulting the setting from a 14. We're changing this default setting from a 14 to a 5-period setting. Okay, now we use this RSI setting a lot in our specific strategies and in trading, but now we're going to be using it for something entirely different. As always, we want you to learn the strategies and paper trade first, because this technique will really help in extending your gains and getting you some much larger profitable trades. But it's not going to help at all unless you really understand the process. And the way to understand that is by watching this video over and over and then paper trading this technique. So don't just jump in and feel that you've got it under your belt and you can start trading it tomorrow. I want you to really understand this process. And even if you don't get it the first time, continue to paper trade, because it doesn't matter how well you think you know this technique. If you really don't understand the process entirely, you actually won't help. It won't benefit you, and you won't help to use it, because in the long run you'll probably be losing money because you don't understand how to implement the process. Okay, so learn the strategies, learn this technique, and then paper trade, and then you'll get our specialist edge, which is consistency in your trading. All right, so let's look at some examples here. The first one is in TIF Tiffany. This was a signal that was given to our members. Strategy number 4. That, remember, is the strategy that is designed to get you in and out in roughly about 3 days. So this is where this technique really works well. And I'm going to show you a couple of strategy number 4 examples here. Now, we went long on the 14th of June at 73.17, exited the very same day, which is a typical strategy number 4 type of trade, at 74.22. So we made a quick point, little point and 5 cents in this particular trade. Now, this is the way strategy number 4 is designed for traders that want to get in and out very quickly. But let's just say you really have a feeling about the markets, you really have a feeling about a particular stock, and you think there's a lot more room left in the direction. Well, you can apply this particular technique. All right, so here's a chart of Tiffany. As you can see, circled in blue, that is the setup bar. That's where we gave you the night before. We told you to go long if we trade above. All right, so we're not going to really go into the rules of the actual strategy. We're more concerned about applying this technique. But had you used the strategy, you would have entered the next day at the point in green and then exited right at the end of the day there. And so it made a quick point and 5 cents. So that's a very nice quick trade. But let's just say you feel there's a lot more room left to the upside. So how could you apply this particular technique? Well, the first thing we're going to do is we're going to apply the 5-period RSI. As you see here in blue, that is the 5-period RSI. I'm going to use the thresholds of 70 for the overbought and 30 for the oversold. Now, we're not concerned with whether the stock is overbought and oversold. If you're a member of Specialist Trading, you know that we don't believe in those conventional points of wisdom. We really don't believe in those at all. We're just going to use this as a tool and indicator in which to tell us whether we should raise our stop or leave it unchanged. All right, so this is another point here where I want to mention if you were using this technique, what we'd want you to do is use multiple equal lots, meaning let's say you had 200 shares. Well, you would have exited the first lot at the standard exit we have here in red, and you would have made a little over a point. Then you would have continued to hold on to your second lot of 100 shares, and you would have continued to keep your stop in its original placement. So we're not going to move our stop to unchanged or to any specific level. We're going to keep our stop where it is. So on balance, if some chance there is no more room to the upside in this particular trade, well, we'll probably just break even with all of our trades. We'll get stopped out on the second trade with a loss, but we'll have the profit of the first trade. So on balance, we'll probably just break even. But we're hoping to get a little bit more room to the upside. So let's see what would happen. So we sold our first 100 shares at the designated standard exit. And now what we want to do is follow and track the 5-period RSI. And we want to see eventually that the RSI is going to be going above its threshold, as it does here, where we have the red arrow. That's the first time where it went above its threshold. Okay, now we're not concerned whether the stock is overbought or oversold. We're just using this as an indicator, as a tool to tell us where to apply our stop placement. All right, we still have our stop at the standard place. We've exited half of our position. We've exited 100 shares. All right, and now this is our trigger. Once we are above the 70 threshold, we are going to be tracking the 5-period RSI, the blue line, and we're waiting for the first time that it goes back down below the 70 threshold. So we want to see it go above and then go back down below. Once we've closed the bar and gone back down below, we're going to see the corresponding bar with that movement in the RSI, and that's where we're going to place our stop, right here. So as you can see, in the RSI, we went below the 70 threshold, and the bar which corresponds with that is right here. So we placed our stop. We moved our stop from somewhere around these levels up to here now. So now this is our new stop, all right? And we're going to leave it here. We're not going to track it until something else happens. So let's continue to track the trade and the RSI. Now the RSI is still below the 70 threshold. Our stop is still in place at the red dotted line. And we see this, the stock is kind of just hovering at these higher levels, higher consolidation. And the RSI is starting to move back up again. And now, lo and behold, it goes back up above the 70 threshold. So let's start monitoring the RSI. As you can see, we're still above the 70 threshold, and the stock continues to go higher, just as you had thought. And we go much higher. We're still tracking the RSI. And now the RSI is starting to head down a little bit. And look what happens. Now it went right back down below the 70 threshold again. So this is our trigger now to move our stop up to the bar which corresponds to the RSI going below 70. And we move our stop up, in other words, right here, 1 to 5 ticks below this bar. See how this works? So we're just placing our stop as it is in accordance with the RSI. Once it goes above the 70 threshold and then comes back down below. And as you can see, on the very next bar, we got stopped out, we exited, and now we had a gain of 6 points and 83 cents. So this really extended our gains. Had we traded two separate lots, our first lot would have made a little over a point, and our second lot would have made nearly 7 points. So this is why we suggest using multiple equal lots. You know, if you can only trade 100 shares, well then sell 50 shares, half of it, at the designated or standard exit, and then sell the other 50 shares using this technique. Now, you don't have to use this technique. If you don't feel that you know, whatever you're trading has more room left in it to run, then don't apply this technique. Or a lot of traders just would rather say, listen, I only want to be in and out for a couple of days. As you see in this example here, you were in this trade for the rest of the month. Maybe a lot of people don't want to tie up their capital that way. So you don't have to use this technique. This is just a great technique for a lot. We've had a lot of members saying, Steve, I love strategy number 4. I love strategy number 1, but oftentimes I'm out too early, and then the stock continues to go in the direction I had originally, you know, bought or sold in. So what should I do? Well, this is a great technique for extending those gains. Let's look at another example now to the downside. This was in HSP in July. Once again, strategy number 4, a strategy that is designed to get you in and out in about 3 days. We went short on the 25th at 52.61. 2 days later, we exited at 51.86 for 3/4 of a point. That's another thing with strategy number 4. It's designed to capture anywhere from 25 cents to a point, but rarely do we get gains larger than that, mainly because we're in and out very quickly. Right? It has a high probability for success, but the gains are very small. So what happens if you say, you know, I love strategy 4, but sometimes it just keeps going in that direction. I want to hold on to my position. Well, you can apply this particular technique. Let's see how it fared with HSP. All right, we're below the buy-sell line, excuse me, and we have a setup bar here circled in blue. So this means we're going to go short if we trade just below that using strategy number 4. Now, once again, we're not going to go into the strategy and show you exactly and talk about the entries, exits, and all that. Having said that, just know that this is where we would have entered the trade short, and then 2 days later, we would have covered it right here for a quick 3/4 of a point gain, in and out very quickly. All right? What happens, once again, if you said, you know what, I really think there's more room to the downside in HSP? Well, let's say we were short 200 shares. We would have covered half of our position, or 100 shares, at the first designated exit point right here and made 3/4 of a point. But then we would have applied this tool using the RSI, the 5-period RSI, and now we're tracking RSI below the lower threshold, or 30. So what we want to do is monitor the trades and see how the stock fares in accordance with the 5-period RSI. Now, as you see right here, on the very next day, we went below the 30 threshold. So now we start monitoring the RSI, because we know once we go back above the 30 threshold, that's where we're going to place our stop. All right, so we see that here that we were right in thinking that HSP was going to go lower. Now we just have to simply wait and see where to place our stop. Remember, our stop is still in our original placement. We have not changed it since the beginning of the trade. But as we watch HSP, we see it's going much, much lower, much, much lower. And then all of a sudden, on this particular day, the RSI goes back above 30, its lower threshold. So what does this mean? Well, the bar, the daily bar that corresponds with that rise in the RSI is where we are going to place our stop, just above that bar. And that would be right here, okay? 1 to 5 ticks above this bar. So now we've lowered our stop, which was originally somewhere around these levels, all the way down here. So we're going to be locking in all of these gains, all right, on our second position. And now this means we will continue to track HSP. If it does not trade above here, well, that's fine. That means the RSI will most likely go down lower, below the 30 threshold. And then once it rises again, we'll lower our stop even lower, all right? But let's see what happens on the very next bar. Well, we're stopped out because we went up to that point and we made 10 times our original trade. The original trade was 3/4 of a point. On this trade, we made 7.5 points. So this is why we always suggest, it's not a rule, but we suggest to trade multiple units, okay? Trade equal multiple lots. So if you're going to be trading, even odd lots, trade them so that you can divide them equally. If you trade 20 shares, exit the first position with 10 shares at the first point, exit the second 10 shares using this technique. But as always, this is a suggestion. If you're the type of trader that wants to get in and out, you don't want to tie up your capital, you do not have to use this. And we're not also guaranteeing that each trade will look like this. Many times you will get to the initial exit and then the trend will change and then it will go the exact opposite direction. So it didn't even apply to hold anything longer because the stock did not go in the desired direction anymore. You got out at the most opportune place and then it changed direction. So that's why we always suggest these points to remember. This is designed to catch large trending moves, but it's going to be up to you whether you decide to go for the long trendy move or whether you decide just to take the short quick trade. Now, this can work on any of our strategies, any of the strategies we teach here, any of the upwards of 10 strategies we have for our members, and it works in any time frame in any direction. Now, it works best, once again, using multiple lots. Why? Because of the money management concerns. If you happen to exit one trade and make a small gain of a point, you can really extend your gain by anywhere 5, 7, 10 points on the next contract. But if you lose on the next contract, well, at least you're just going to break even. So this is a great way to maximize your capital while keeping your losses down. But one other thing to remember is that what if the trade is a loser right off the bat? What if it never even gets to the first exit point? just remember, if you're going to be trading multiple lots, multiple positions, well then you should have enough capital in your account to account for those multiple positions, okay? So remember to always trade wisely and be sure that you have enough capitalization. The only indicator we're going to be using with this technique is our RSI. We changed the standard setting of 14 down to 5 period. As always, as I said in the beginning of this presentation, none of this will matter if you do not understand the process properly. You can watch this video a couple of times, and then if you decide to use this technique, if you don't implement it properly, if you don't understand it, you'll most likely come out with a losing trade. And anyone else could have applied it properly and come out with a nice winning trade. But if you don't understand the process, if you don't understand how to apply the RSI, how to watch it, how to move your stop either up or down, you'll probably wind up losing. So you really have to understand the edge here in order to get our consistency, okay? So watch the videos, and if you have any questions, please, there's no reason why you shouldn't email me. I don't want you to just jump in and use this technique without really fully understanding it. So any questions concerning anything either on this video today or anything on the website, please do not hesitate to email me at stevenprimo@specialisttrading.com. Now, before I lose my voice entirely, I ask that you take one last view at our disclaimer. I showed you how to use this technique to extend your gains, but remember, we can in no way guarantee that any of these results will be repeated in the future. So as you're taking one last look, remember to email me should you have any questions. If not, have a great, relaxing, enjoyable weekend, and we shall see you right back here next week. Bye-bye.